Good morning. Today is Wednesday, July 31st, and this is the bond breakdown. Let's talk about the bonds. Here we go. Let's open up some charts. This is my 60-minute chart, and we have an overnight low of 154.23, overnight high of 155.02, and we're continually pushing up. So we're trying to see what's going on. I know that we have a mother bar inside of our situation. The top of that range is 155.03, so I'm looking very cautiously at that level, not really aiming above it until we get some sense of closure. If anything closes above it, then I'll start thinking about that from an hourly standpoint. If anything just closes above 155.03, I'll be excited to take a look at it. Let's look left for a moment off of those 155.03s. As you can see, there's space from an hourly standpoint all the way up to 155.16, 155.18. That's what I'm looking at. I'm looking at the fact that there's a lot of seller business that happened last time we were in this range, and the buyers will have to really work hard in order to get things up there. Last time we touched around this level, the market literally floored itself. It made a 2-point move in just 2 hours. It was the biggest move. I believe I made a video about it. So really not, or rather I should say cautiously optimistic about the buyer's ability to overtake 03s and get things back up to the 15, 16 level like they were before. Let's talk about news. You know, it's Wednesday. Yesterday started a FOMC. The FOMC did their thing, started meetings. Today we have an announcement, so I expect the market to move pretty slowly. We have some settlements going on. We have 7 a.m. NBA mortgage. 8:15 is ADP employment. We have employment costs at 8:30. Treasury refunding announcement at 8:30. We have Chicago PMI at 9:45. State Street Investor Confidence Index at 10. Petroleum status at 10:30. 3-year notes, 10 years, 30 years at 11, and then the FOMC announcements at 2, followed by the Fed chair's comments and press conference at 2:30, and then farm prices at 3. So hopefully we're way out of the market by then. We've made the money that we need to make, and we've got out of there. Because who wants to be trading at 2 p.m.? We don't trade so that we can sit around and trade all day. We trade so that we can trade for a little while and get up and enjoy our families, right? Let's see if I can find the 31st here and get the next day up and going. Yeah, so 8:15, we should be watching out. There's a red folder for the non-farm employment. 8:30. Yeah, so I will look at this red folder 8:15. If I'm not in a trade, try not to get into one. That happens in another 20 minutes, so we'll see what happens with the market. We're going to try and pull up some daily information. Try and pull up some daily information for a moment. Let's go to the 5-minute chart. There was a price jump that concerns me. We can see if they can get the 27s back out. There we go. So we're right in yesterday's opening range of all places. Right back in yesterday's opening range. That's where we are for a price standpoint. So really the market did a little moving yesterday, but things are kind of exactly where they were to start off yesterday. So if we stay inside this range for the next 20 minutes, we'll be exactly where the market was yesterday. I'm looking for this price jump to come down, and let's talk predictions. Let me see. Look like we've had a couple rejections. This is the ES, guys, and I use the ES in order to formulate what I might feel is any sort of thoughts on what could happen. It's the hourly chart of the ES, and we've been denied at 20 twice. First touch I expected, second touch That's pretty big. Okay. Let's see if the ES can find support somewhere. See if it can crack through these 20s and get up to 26. And if that happens, conversely, I believe that the bonds will be falling again. I think that the bonds will be falling today again. So it'll be choppy. Of a mother bar inside bar situation from 3 a.m. to 3 a.m. and 4 a.m. bars. So we're looking for a closure above 31. If we can get out above 31. If not, look for support at 25 and maybe you can ride it back up to 31. 24s came out once. So I'm looking between 31 and 25 for the market's decision on where to close. Those are my key levels, 31 and 25. And I don't think I'll be interested in anything other than that. I think I'll want to sell the bonds today, at least for the morning, and kind of see where things leave off after that. I think there's more work to be done in order for the bonds to be able to crack that major gap up top at 155.18, 155.19. In order to get above that level, we're going to have to do some more dropping. Let's look at the GOMI. GOMI's all greens. Get ready for a head fake, right? GOMI's all green. Oscillator's looking good. Yeah, if I had to choose what the bonds might do today, I think that 155.03 is going to be a major level to get past. If we can get past there, then maybe we can go back up to 155.14s. And then things will start getting tough in that area. More likely, the scenario would be that we'll have to go ahead and push on down a little further. In my opinion, I think these buyers are going to tire out, and then we'll go back down a little further. I don't think today's the day that we're going to get into that gap that I've been waiting on for a long time. Hey man, but who knows? This is the market, and the biggest thing is to have a plan. Our plan is to stay buying the bonds. Our plan is to watch the S&P and be careful. Trade tight. Trade smart. Don't let the market fool you. Hey guys, my name is Jay the Trader, and I'll be back tomorrow with more bond breakdown. If you need anything, if you have any questions about the market, if you have any questions about how to look at the market, what the market might be doing, please hit me up on YouTube at Jay the Trader or at on Instagram at J_the_trader. And I'll make sure to answer all your questions to the best of my abilities. All right, guys. See you later.